We just got bad economic data that just came out. The ADP non-farm payrolls just dropped, and it was a pretty crappy number. We're going to talk about that in this video. Stay towards the end because we're also going to talk about some economic data that comes out later in the week and how this all ties together. But before we get started, welcome back to the channel. My name's Doc. Throughout the day, I'm a resident physician, and at night and on my lunch break, I take you guys on my crypto and investing journey. Gonna get this quick to you. I thought it was really important, so I jumped out to my car. I thought I'd record this real quick in between seeing patients. So the ADP non-farm payroll data, this is the payroll data that excludes government jobs and then obviously non-farm payrolls. And this is really, really important because it's one way that the Fed can get a pulse on what the market looks like, right? Specifically payroll data. And this is important because tomorrow we have the initial claims data that comes out, and then Friday unemployment data comes out. Friday is going to be a really, really important day, which, by the way, guys, if you're getting any value of this, hit the like button. Consider subscribing. I try to bring you guys fast, reliable information in a way that's super easy to digest. So the projections for ADP non-farm payroll was $110,000. Last month, it was $60,000, and we came back this morning within the 30s. So this is not good because this could be interpreted as the economy is starting to slow down. The economy is starting to cool off. And the interesting thing, or one way that I interpreted this data, was that the JOLTS data came out earlier this week, and those were better than expected numbers. Now, obviously, all parts of this data tell us a little bit different part of the equation. And we kind of just mentioned that Friday is going to be a really, really big day to see where the economy is going. I will say that the ADP data, the payroll data, this is for May, right? So it's backwards looking. It kind of just gives me like a little bit of caution, right? Last I saw, the recession indicators for this year, they've tanked. They've fallen quite a bit. At one point, when we were peak tariff shenanigans, the guesstimates for a recession was 50%. We just fell down to 28% that we have a recession this year. So that's very reassuring, right? This ADP payroll data, it's backwards looking, but it can help us give a peek into the future, right? If we have less payrolls, less job openings, it could be tough. It could tell us tough things, or a dark Q3 is on the horizon. The other thing that I want to say about this is initial claims, that data that comes out tomorrow, and I'm going to report on that. I'll make sure to make a video on it. That's going to be really telling, but ultimately kind of the main piece of data that the Fed, Jerome Powell, uses is the unemployment rate, and that comes out for Friday. Speaking of Jerome Powell, as soon as the payroll data came out this morning, President Trump was quick to tweet or Truth Social or post or whatever you want to call it, whatever it's called these days. He was quick to point out that Jerome Powell is behind the ball on cutting rates. And objectively, or I guess it really depends how you look at it, but we were late to the game during COVID. And the other interesting thing, many EU countries have cut their rates numerous times already, right? Numerous times already. The interesting thing is our last PCE, that's a metric that looks at the inflation data, our last inflation print was super low. If I'm not mistaken, I believe we're at 2.1% month over month, and the expectation by the Fed is 2%. So it's kind of frustrating. Obviously, we all went lower rates, not only because we know that's good for risk on assets like Bitcoin, like the S&P 500, like a lot of altcoins that I know we are both holding. We obviously know low interest rates are good for these risk on assets. But the other thing is low interest rates are good for just everyday living, right? The lower the federal fund interest rate is, the lower your credit card payments are going to be. The lower interest rates for vehicle loans and home loans. And we all know that right now, if you've tried to buy a house, it's tough. This is the housing market's actually down right now. I'm looking at different rental properties here in Texas, always looking for a good deal. And there are a lot of houses on the market right now, it's definitely a buyer's market. And a lot of that is because home interest rates are in the 7 and 8%. And that's for people who have good credit. It's just, there's been this price inflation since COVID. So that makes things really, really tough. Ultimately, how does this all affect Bitcoin and your altcoin bags? Well, I do think we need to see interest rate cuts and quantitative tightening to stop. The projections for the next FOMC meeting, which is literally in just 2 weeks, projects that there's a 99% chance that we don't get an interest rate cut in June. We talked about that in my last video. If you haven't seen it, check it out. July is interesting. There's roughly a 25% chance that we get a cut in July, and it is not my base case that we get a cut in July, but I do think that 25% chance is going to start to grow because there is going to be a lot of pressure that mounts as we continue to get lower and lower inflation prints. Ultimately, September is where we think the first rate cut will be, but the Fed Watch tool says that's roughly a 50-50, right? So we just got to keep our ears to the ground, keep looking. Does Fed Chair Powell, does he hint towards when interest rates will come? I can tell you he spoke on Monday and he gave 0 hints. It was the most vanilla speech ever. He really just went straight down. He did not tip his hand one way or the other. The other interesting thing that I kind of want to talk about, and this all relates to the economy, and believe it or not, the economy, because you might be thinking like, hey, Doc, I'm investing in crypto. Like, I don't care about the economy. The macro economy very much has a play in crypto. And the reason that I say that is the S&P 500 and Bitcoin, and thus all of our altcoins, are highly, highly correlated. So a lot of these macro conditions very much play a role. The other thing that I was going to mention is, a lot of folks are saying like, Q3 could be tough, not only for the economy and crypto. I suspect we're going to have really good Q2 earnings, right? And the reason that I say that is because everybody thought that our Q1 earnings were not going to be good, and everybody just blew it out of the water, right? NVIDIA, Tesla, even though Tesla had a bad earnings call, the stock still went up, right? NVIDIA had a great earnings call, blew it out of the water. Amazon, absolutely killing it. Even Google, with this recent pullback, they've been absolutely ripping. I could go on and on. Netflix has been killing it. Meta has a lot of really cool things in the pipeline. So I do think that we're going to have a really, really good Q2 earnings. And then, baby, we get to Q3. And all of the analysts and forecasters are saying, then we get to Q4. So we just got to get through Q2. We're in Q3 right now. And that is when we really, really start to crank it up, right? We just got to get to September-ish because that's when people are saying the market could start to fly. Let me know down below, what do you think of President Trump tweeting Jerome Powell? I have mixed feelings about it. I like that the Fed is independent and they're doing their own thing, but I really do think that we should have cut rates quite a long time. We're nowhere near the Fed funds rate. Ultimately, we got to wait till Thursday, Friday to get the initial jobless claims data and the unemployment rate on Friday. Here's the thing. Bitcoin is sitting at $105,000 though, and sentiment is in the toilet. Benjamin Cohen, he has a social risk that he's formulated. It's made off different YouTube channel views, Twitter followers, etc. It is in the ground. It's totally in the ground. It's a score from 0 to 1. And right now, I think the score is like 0.05. So it's less than 0.1. Retail is not here yet. We are all early. Continue to stack bags in plays that you have convictions in. Like I said, if you got any value out of this, hit the like button, subscribe. I'll see you guys in my next video.